So welcome everyone, it's Stuart and Tanya here. We're based at Fullstack and we've got a wonderful presentation for you today based on popular demand. And it's really to help out the founders that are possibly transitioning from a do-it-yourself finance situation, bootstrapping situation into something that's a bit more organized and has a bit more accountability, particularly with other stakeholders like investors. And this presentation is really just here to help you get those details in place and ultimately reduce your input and get more productivity there. Any extra insights there, Tanya?
Yeah, I think it's going to be a great one. Let's go.
Okay. Cool. So, quick disclaimer, please get your own personal tax advice or accounting advice for your own situation before making any big moves, because this is a general webinar, obviously. So foundations, getting the foundations in order is fairly key. So it's a more straightforward journey in scaling up your finances. So it's a different level of involvement at the scale-up phase with your finance team. Founders are expected to be less hands-on. Perhaps you have a finance manager or a full-time accountant working on non-client-centric parts of the business. And it's good to have a good team of operational executives and a reliable team to help you, I guess, meet your requirements here in the finance department. Because it's not Kansas anymore, right? So don't do it all yourself. That's only going to may press the wrong buttons. And so please outsource it if you can to either internally or professionals.
Yeah, and I think the important part there, Stu, is to remember, where is your time best spent as a founder? Where are you better utilized? Is it working in the business or working on the business? So when you find that trying to do your accounts yourself is taking you away from the valuable growth phases or stakeholder communication, then that's the perfect time to understand, okay, it's time to make that switch. I need to pass the reins on. I need to let go. Yeah, definitely think that's a good time to make that decision.
Absolutely. Cool. So scaling up your finance, there's more things on the calendar to look out for. Do we have our corporate structure right? Is our tax in place? Are we friends with the ATO? How are transactions flowing? Is there any proper authority placed on the transactions, particularly going out of your company? Is your finance apps stack organized in the best way that it can be? How's your cap table? Ultimately, are we reporting to our stakeholders and the government the right way? Cool. Before looking at your finance department, it's good to look at some goals for the business overall and place your finance team in perspective. Like ultimately, is your business chasing more recurring revenue, looking at different markets, you're going to be targeting a different client base, you're going to be launching new products. These all have questions and considerations for the finance department. So it's good to be aware of these beforehand. You might be doing a cap raise, in which case you might need to keep your traction of how you're performing month to month, plus perhaps even show some overperformance on various KPIs. You might be looking at an M&A event later in the year as well, in which case, if it's an acqui-hire, you might need to implement an ESOP to retain some of the key staff in that acquisition process. There might be purchase of IP, in which case it might be good to optimize your R&D spend beforehand. If it's just a more general business purchase, you might want to look at just the general KPIs around EBITDA. So corporate structuring, we often get reined in, help tidy up the corporate structure at this inflection point. So it's good to know what components are there for corporate structure. So for a holding company, this is typically where the IP is held, the investors jump in here, and there's generally an ESOP organized from the holding company as well. For trading companies, this is a bit more litigious in nature because you've got employment of staff. This is where most of the contracts are with suppliers and much more. And it's much of muchness as to where you hold your IP. You might hold it in the holding company, you might hold it in a separate IP company. Either of the two is generally fine. Here's a quick example of a global tax structure. We might have the holding company here, where the IP investors and ESOPs are placed. There might be some financing to the subsidiaries below. You might have a subsidiary in Australia, US, UK, wherever you're doing significant sales. and it might be easier to set up a subsidiary, purely just to help you meet your local payroll obligations in that country. And it might be also a bit more relevant for where you want to claim your R&D tax incentives. For instance, in the Australia environment is fairly fairly good for R&D tax incentives.
Yep.
Yeah, cool. This is a different structure. Maybe we had the IP on a separate subsidiary altogether. There might be license fees to direct profits to that IP company. Again, that's all about maintaining some Chinese walls for your business risk. Yeah. So restructures, it's a lot of it can be dictated by where your investors are. We've certainly seen a lot of flip ups recently up to the US, purely because maybe US investors or Singapore investors might be prefer to be closer to their investment. So that's often the case. There might be IP movements. Tanya, did you have any comments around that? You've seen some recently.
Yes. So moving your IP is obviously a tax event. And if it's moving internationally, then it could actually hurt you for tax purposes. So that's something that you definitely need to keep in mind when trying to understand how the flip up's going to work. So, for example, if the holding company or the IP company is not in Australia, then there's likely going to be a tax event that will happen when the IP exits Australia because they want their piece of the pie, right? And if you've claimed R&D on those costs, then it has no cost base for the IP. So it becomes pure taxable income. And there might even be, depending on what you develop or what you've created, there might at times also be export duties. So if it's a physical thing, so it's an important thing to understand before you start. And when you are looking at getting your structure ready, it's a good time before you go international to sit down with someone who knows what they're doing and talk through it all. And it also takes a while. It takes quite a while to get everything ready and right. So usually when you have that first nibble from the investors, there's a US investor who wants to invest, but because of the beneficial tax benefits that they get within the US, they want you to have a US holding company. Then make sure you get in touch with someone really early, like us at Fullstack, to get it going, to get started with the process.
Yeah, there's certainly a lot of pieces to consider from a commercial, legal, and tax perspective. Last Papa piece, 13 pages. It's certainly not an easy. Cool. Let's move on. So let's jump into the finance department. Right, there's a lot of considerations here. Tanya, want to jump in?
Yeah, before we get to that, we do have a question here from another Tanya. Hi, other Tanya. So Tanya's question is, at what stage do you typically need to formalize the transfer pricing arrangements between overseas subsidiaries? So great question. And it can never be too early. The rate is going to change, might change depending on what you're doing. So at the beginning, when you start, we recommend having at least the base transfer pricing agreement started. So it might not be finalized, but formalize it so that for ATO purposes, you've got some support as to how you were pricing different things, especially if you've got R&D, if there's R&D, because your market rate will basically, what you're selling it for will depend on what your transfer pricing agreement says. Otherwise, the market rate, if you just use cost, for example, the market rate substitution rules might come in and it might be completely different to your transfer pricing. So the margin is going to be, might be much larger, but because of the way that it works with cost, you'll have no cost basis. So you're paying more tax in the end and forking out more money. So definitely feel like when you have international entities and you know what your product or service is going to be, and if you've got inter-entity loans, get the transfer pricing agreement at least started, formalized as soon as possible. Hope that answers the question. All right, up next, we'll jump into the accounting platform. So the first thing I'd like to sort of explain just with regards to accounting platforms is that there is no best fit or one, this app does everything for everyone. It depends heavily on what you plan to do and what your business strategy is. So for example, if you are a retailer, for example, let's say you're a retailer or you're an e-commerce store, or you have a physical storefront, or you sell services, depending on what you do, your needs from an accounting platform is going to be different. It also, if you have a very strong person in your finance team, they might also have some sort of internal preference where they will feel like everything that they have to do is really hard work because they're doing it on this platform that they hate. So hate might be a strong word, but that they just don't get along with. So for example, let's say if they don't like XYZ accounting system, then everything you ask them to do will feel like a lot of work, and you won't see a lot of innovation and shortcuts being taken. They will just do as they're told or have to get someone to give them instructions. But if it's an app that they love and the user interface is easy to navigate, then it's likely the output's going to be better. Your team's going to be happier. So don't throw that away, that part of it away when you're choosing an accounting system. Also try and make sure that what you're using is right for the stage of your business. You don't need a Rolls-Royce accounting system if you're bootstrapping. But once you get bigger, you might need that Rolls-Royce, and the base accounting standard will probably not work. We personally prefer Xero because it's so easy and it grows with the business quite well. It's got some good reporting as well. And the thing to remember with Xero is it can handle high volume. It can handle a lot of different things. It can integrate really well with add-ons, but it might not be exactly what it is that you need. So when that happens, when you start getting really, really high volume, or you have very intricate transactions that need to happen, cross-country postings, recharges, things that you might need departmental tracking, which Xero does have, but it's limited. It can only track under 100 different things, and you only get 2 tracking categories. So when that happens and it doesn't fit the purpose anymore, it's time to go over to something a little bit bigger. And when doing that, I would highly recommend looking at having someone come in who understands the different aspects of the accounting industry. We call them systems reviews, where we speak to the different key players on the team and understand what the needs are, and then decide on what sort of system to use. And NetSuite is a really good platform. Then there's also Microsoft Dynamics. There are a lot of really good, intricate systems out there, but only if you need them, only if that's necessary. So you don't need to go to the big boys immediately. Wait until it's necessary. Otherwise, you are just setting yourself up for a lot of pain with unnecessary requirements.
Cool. So
Yeah,
banking.
Banking.
So traditional banks, right? The big four, often get asked about them. Who's the best? Who's the best? My personal favorite is CBA. UX UI is right up there globally. But that said, a lot of traditional banks, they're still beholden to visit a branch to get a new signature to account. So that's why we might look at some more neo banking options like Payable or Wise. They might offer amazing flexibility for setting up international accounts, paying global teams, and you can also engage in some FX strategy fees, such as when you're receiving US sales, you pay off your US expenses in the same account, saving some money there. And just told to me that we should avoid PayPal and Amex.
So Amex is horrible to reconcile. That's the only reason why. Their transaction history reports don't agree to their statements, and they make changes to the statements and the transaction history reports. So it's a pain to reconcile. So we can't tell you not to use it if you have a business card that gets amazing rewards. You do you. We're not going to tell you what to do, but just bear in mind that if you have PayPal or Amex, the reconciliation requirement is just, it adds a lot of complexity that's not really necessary. So if you do have alternative options, I would recommend that.
Cool. International banks. We used to have the Silicon Valley Bank, but we took it off.
Yeah. Yeah. Good idea.
After the recent incident, I'm aware that they've been taken over by a more real player.
We'll see.
Yeah, we'll see. We'll see how they go. And yeah, if you've got a large investment from a institution, you see a lot of people setting up things like term deposits.
Yeah.
Yeah.
Hashtag not financial advice.
Yeah. Yeah. Patreon.
Yeah, I might fangirl a little bit about Patreon. So Patreon is also a virtual bank, but they have an additional set of tools where you can manage your payments international and locally. And you can schedule, it feeds really well with Xero. They integrate with other platforms as well. And you can basically run your whole accounts payable function through Patreon, which is a game changer. So if there's anyone who if you're still authorizing bills via email, still going, hey, can I pay this? Respond email, yeah, you can pay this. Stop immediately and go check out, well, after the webinar, go check out Patreon. Definitely recommend something like it, which there might be others that we just don't know about, but something like it to manage your accounts payable. I promise you will thank me. We also have payment gateways, which, oh, thank you. Thank you, Tanya. Other Tanya just let us know that Airwallex now also released these features recently. So that's fantastic if they now also have managing approvals. It was the one reason why I didn't like Airwallex, is because they didn't have that approvals function. So they may have been listening into some of my calls. I don't know. But payment gateways, it's very common to use electronic payment gateways. It doesn't matter what you do. Most people have an electronic payment gateway system requirement. For our SaaS businesses, we mostly see Stripe being used, sometimes the native Shopify accounts. And it's great to have, it's great to understand how the data that's within your sales system, how that works and how it has to work back to your accounting. Just simply coding the revenue that comes in, cash coding the revenue that comes in from your payment gateway, it's not sufficient if you are trying to report correctly, because what's going to happen is you just changed your revenue recognition to cash, and you're also not really showing your true gross sales amount, because the payment for the fees may already have been taken out and withheld. So it also has some implications on GST. So if you had sales that were not to Australian-based customers, then there might not have to be any GST. And if you're just coding all of the revenue as, well, it's just income, it's just cash that came in and everything is just going to sales and everything just has GST on it, then it gets to a point where your GST might be overstated.
So accounts payable, it's probably good not to have all the bills go to the founder's emails. Let's start formalizing it. Let's set up something like accounts or AP at yourcompany.com or .au and get people to suppliers to direct your bills there. From there, it's quite easy for your account staff or bookkeeper to log in and start pushing some of those bills over to Dext for the processing. Tanya, do you want to jump in?
Yeah, we also see a lot that, let's say you don't have the requirement for a full-time bookkeeper. So you're, for example, outsourcing that bookkeeping or data processing functionalities, say, to us. We would need access to that accounts or bills or whatever you call it, email address. And the easiest way to do that is to just set it up as a shared mailbox. It doesn't need an account per se. It can be a free shared mailbox or a group mail. Most email providers have that as a free option. And then we just need to be given access to it. So if you think about outsourcing your accounts payable, the person who's processing the transaction through your accounts, they have no idea what happened, why you had an expense, why something needs to be paid in 3 installments. They have no oversight. They don't have no insight into the ins and outs of the business, which is a great thing because they will ask questions. It's a great thing for me personally. I prefer to have it segregated as much as possible, just so that you don't have these issues with it's one person approving, one person paying, and one person receiving the goods or the services. It just reduces the risk quite significantly. But sometimes what will happen is we need the context behind the bill, and that will be in the email. So everything that we need to know will be in the email. So when you are setting up your accounts, let's say you're setting up a DHL, for example, setting up a DHL account and they ask you for the billing email address, you will use your account's email address, not your personal one. Same with recurring bills, any software that you set up for, you would use that email address and everything would go there automatically. That also makes it a lot easier for us to put in some auto forward rules where when certain things happen, it gets sent to certain places and it can be processed in a more succinct way. Then with accounts payable, when you get to this volume stage, you can't just jump in every time an email comes through with the bill. Oh, I'll just pay that today. I'll just pay that tomorrow. You do need to keep track of everything and how much you owe everyone to make sure that your liabilities are not understated or overstated, and also that you're not accidentally paying twice, which is something that happens a lot with these ad hoc payments. So when you do have an accounts payable cycle, you can go weekly or monthly or fortnightly, depending on what the requirements of your suppliers are. Just make sure you have an actual process in place, a system in place where you're going in certain dates. And then obviously a batch payment ABA is the easiest way to go. No retyping, no finger furfies or accidental switches. Yeah.
Cool. All right, virtual cards, we love them. We actually use Wheel for a lot of our virtual card systems here. We have one for different departments and you can set a spend limit. So, if, say, marketing staff, you can give them a spend of, say, $2,000 per month, and they can't really spend more than that. They're also obliged to upload substantiation. So there's some governance there as well. It's always evolving this space every year. There's different providers, there's different features. We'll probably have to update the same webinar just to talk about the different updates there as well. Cool. We've got a quick diagram here. Do you want to jump in?
Yeah, so this is what I was just speaking about briefly before, the outsourced accounts payable, what it sort of looks like. So you see where the little humans are? That's the input from your team. The rest is kind of what our team will do and take care of, but the little humans is how little you would touch it. In the alternative, if you're a one-man band and you're doing everything, then at all the big circles, that would be you needing to take an action. And you can see that because you don't do it every day, you'll probably not do it really well. You might skip a few steps, and at the end, it's going to be a little bit more painful.
Yeah.
But
with this approach, you could just schedule in once a fortnight finance meeting, go through the outstanding payables, and it could be all paid within 2 minutes. Yep. It's all good.
Yeah.
Accounts receivable. Cool. So ideal to have a billing email address set up as well. You may have invoicing inquiries from your customers. It's good to have it all sequenced in one space. So even your finance team will help you out there. So want to jump in?
Yeah, if you do have clients who need to pay on when you bill them, not like they pay up front. And you actually have an accounts receivable account that you have to run. Highly recommend keeping an eye on it very diligently, especially if you have something like a service or even a software as a service where you might need to have in the back end of the software, you might need to have some controls in place that if their payment's been declined or if they've reported it as fraud and it's cancelled, it's reimbursed it, you need to cut their access. We often come across SaaS platforms. So clients come to us on a SaaS platform, but they don't have that functionality built in to their back end. And so highly recommend remembering that if you don't get paid, you should be able to cut the access. And if you get paid on, let's say you have 7-day terms or 30-day terms, then you need to have someone reporting to you, letting you know that there are accounts that have not been paid and they need to be followed up with. So sometimes these are genuine mistakes. They just accidentally didn't pay. But sometimes it is nefarious and they just don't want to pay. And if something like that happens, you need to take action really early. So just to make 100% sure that you're going through the right steps for debt collector if needed.
That's good.
Payroll, everybody's favorite thing in the world. With payroll, when you are in scale-up mode, when you're still small, you probably don't need HR functionality, but once you start hiring a bit more, you will definitely need some form of a HR platform. When hiring overseas, it's also really important to remember that there might be local, so internationally, there might be local requirements for you to be an employer there. So that's where you might set up an international subsidiary that is your employment entity in that country. Just makes it a little bit easier. Or you can use an employer of record. There are many of those out there. Yeah, leave is a big thing. Definitely recommend Auto Super. 100% recommend Auto Super. For those who work in the finance industry, what a pain it is to pay super. So setting up the Auto Super within Xero, I would definitely recommend that a lot. And timesheeting is a really important thing, not just for R&D, for example, but it's also important for payment and verifying that work was done. Someone said they worked, a good way to prove that something's been done. For leave tracking recommendations, definitely go with the native. If you have, let's say you have an HR system, you would use the HR system. They would have leave tracking internally. Otherwise, the Xero payroll leave module is really good. They can apply through the Xero Me app on their phone for leave. You can approve it within the Xero Me app. So if you don't have a separate HR system, the Xero Leave file is really good. I also have another question here for particular HR platforms we recommend. And my favorite answer, it depends. So it depends on your need, but we personally like Bamboo and Employment Hero. But make sure that when you're looking at the different platforms, take them for a ride first. So ask for a demo account. Most of them have demo accounts, and you would be able to play around with them on these demo accounts because you do need to get a feel for them. It shouldn't be over complex where you go, I have no idea what I'm doing. Yeah, those are the two that I would probably recommend.
Cool. So ESOPs, if you want to bring your staff along for the journey, ESOPs are a great thing. You might have to organize a valuation to have an exercise price of a small amount. There's often requirements with the ATO annually, so just be wary of that. And there's various tools out there. Carter is international, Cake is international. Orchestra is an upcoming option. Payroll tax. You've seen a lot.
So payroll tax is quite complex. It is a really complex area. And we won't go into it too deep today, but what you just need to bear in mind is if you have more than 10 employees, or if your payroll starts getting to the millions per annum, remember there's a payroll tax liability that needs to be paid. So when you are projecting, because I know all of you have a very beautiful cash flow forecast and you know exactly what you're going to spend in the next 12 months on payroll, right? And so what you would do is when you see it's going to hit $1 million or get close to $1 million, you need to start looking at your payroll tax liabilities to make sure that within the different regions, different states and territories, you are compliant with each of them, with each of the different states and each of the different territories, because they vary quite significantly. The lodgement requirements are also quite horrible. There is no centralized platform. We've been moaning about it for years, but there is no centralized platform where someone can submit all of their state taxes. You have to submit it with each state separately. We recommend doing it internally because of those very difficult reporting and access requirements, but it is something that you can outsource to a tax agent or HR specialist.
Right. So here's some more complex considerations for income tax that we often see. Tax consolidation. It's often employed to help you basically lodge a single tax return for the whole group. And that may be that might be an easy option.
Also recommended for R&D.
Oh, for R&D, certainly, particularly if your IP is in the top entity, but most of the expenses are down below.
Yep.
Yeah. And Tanya, you already discussed some of the transfer pricing considerations at length. Tax residency is also a big one, particularly if you have digital nomads as founders, because there's taxing rights based on where the control and management of the company is based. And it can get quite complex if you have co-founders across different countries, as we often see. And it all comes down to this section in legislation called permanent establishment. And it's just good to read up on the double tax treaties between two countries and to see where your residency or the taxing rights for your income might lie.
Probably one of the most prevalent questions I get when talking about international structuring: can't I just set up the company that's going to make the profit in like a tax haven or a low tax threshold? And the short answer is no. They thought of that. They saw you coming. So if you can't prove that it is 100% not owned and operated out of Australia, and the ATO can prove that the central management and control is within Australia, there's no regional manager, there's nothing like that, they will tax it. They'll pull it into the Australian tax system, which is not great.
Right. Then we have some sales taxes here, GST. It's going to be a little bit different in each country. So Australia has the 10% GST or GST-free items, whereas overseas you might encounter things called VAT, value-added tax, or in the States they've even got sales tax. So it might have a different name, a different rate, and a different way that's applied. So you may want a tax account in every jurisdiction that you're servicing. Right, and it also comes down to what type of business you're running as well. Right, so with marketplaces, we look at the turnover of the whole marketplace, or do we just look at the net rake of the marketplace? Quite a lot of advice there. For SaaS, there's often international sales. There's no GST on exports. E-commerce, well, you've seen a lot of different taxes. Okay?
Yeah. Yes, a lot.
Yeah. All right. Cool. Reporting. Do you want to jump in?
Reporting for everyday business reporting, the zero management reports are actually quite great. That you can see a little bit of them here on the left-hand top side. They're actually, they just come right straight out of Xero. And most of the time it does what you need it to do. But it does what you need it to do from a financial standpoint. It doesn't necessarily help you with board reports or sales analysis or trends. So it does help to have something like that set up. It's customized to you so that you know exactly where your market is, or which products are doing well, which are not doing well. What does your ideal customer look like? That's something that the Xero reports will not tell you. And it's often only when you bring those two reporting elements together that you have a full picture and that you can make some really good decisions.
Yeah, so there's analytics platforms out there which can give you a lot of thoughts out of the box, like Futurely, Fathom, Profitwell. They can highlight different KPIs which investors might be interested in. But to be honest, if you're seeking to become a scale-up or enterprise, might want something more bespoke like Tableau or Power BI, where you're plugging into different data sets which aren't necessarily direct from Xero. And that's where you can get something a bit more customized and bespoke for your business. All right, so reporting to investors, we often see Visible being employed. There's good out-of-the-box options there, as well as integrations with Xero. Mayday is a new one, can help with consolidation reporting, but there's also some of the analytics platforms can assist with that as well. And getting audit ready, right? That's might have reporting obligations in the future. We've had a lot of clients do crowdsourced funding, where they're required to prepare the gap-ready financials, and they're required to be submitted to ASIC. So there's certain requirements there as well. You might need to work with an audit team, audit firm, to help you get all your ducks in line there. And Fullstack can certainly assist there as well. We've recently established Stack Audit to help you assist you with the requirements there. Cool. So advisory meetings are great. I think it's always good to schedule in some time to look over the finances rather than just leaving it to ad hoc requirements. So ideally on a weekly to monthly basis, depending on the size of your business, it's good to look over what you've achieved to date, look over the financial reports, compare it to a budget, look at your accounts payable, see how much you need to pay, how long is your runway. And then it's time to look forwards. When you look at your budget, look at your financial model, anticipate the impacts of any cap raises. How's your equity going? Do you need to go seek further funding from investors or from banks or other alternative sources of finance? We see a lot of revenue financing out there as well. And it's also, for day to day, you also have a lot of various operational matters that it's good to have a third party weigh in just to make sure you're considering all available options. They may even tap you into various talent or people you should speak to in their network, help you get a different perspective or give you extra avenues. Cool. All right. And there's other suppliers out there and advisors that you need to consider as well. Legal. A lot of the legal and the tax considerations that we see often go hand in hand, such as if you're issuing shares, issuing ESOPs, moving IP around. These all require considerations from legal, tax, accounting. If you're a tech company, if you're a scale-up, it's good to work with suppliers that know what's next in line for your business and been there, done that with other businesses which are perhaps a bit further than where you are at. And of course, HR. Natasha, you want to talk there?
Yeah, you're actually able to engage an external HR consultant, which in HR, it's not just about crossing the T's and dotting the I's anymore. There's a lot of culture and staff engagement, and the world seems to have shifted from a fear-based workplace, at least in the types of industries that we predominantly work in, to a more inclusive workplace. And sometimes if you are a specific type of leader, you will need help navigating those difficult waters. And just getting someone in who knows how to navigate the waters and who can help you, at least until you've got your own internal HR, it's highly recommended. And then again, policies and procedures, legal documents, That's the number one thing when you're going from startup to scale up. When you're bootstrapping, I don't need, that's fine. Nothing's going to happen. No one's going to steal my IP. But when you start scaling up, 100% you need it. And it's a good thing to start in the transition period because it's highly likely that you'll have more time and capacity to do it at that stage.
All right. Question time.
Yeah. So I've got two questions here. One from Susan. Hi, Susan. So Susan's asked, we're a US-based company based in Delaware. She's physically based in Australia as a co-founder, and she's asking, is there a way to not pay additional tax coming into Australia via pension funds, etc.? So I do need a little bit more context for that one, Susan, to answer your specific question. But what I can generally speak to is if you are employed by an international company, then you could be employed as a contractor or as an employee working in a foreign country, but would highly recommend looking at setting up a local employment entity within Australia, because then it could be a wholly owned subsidiary of the holding company, but that would just mean that you can do your local reporting. You can have superannuation funds and all of those. And because it's just a subsidiary, it's basically just a service entity, it just recharges it back to the US. So it's an in and an out, and your taxes get handled effectively and the company's taxes get handled effectively as well. I hope that answered the question. Then up next we have, do you have tips? So Candy, hi Candy. Do you have tips on how we can find and choose good quality external suppliers beyond Google and asking your network? And how would you assess their quality before you hire them? So beyond Google and asking your network, those were the two ones that I would probably have recommended. But usually when you work with someone like an accountant, when you have an accountant who's in your corner, or you have similar business owners, they would know who's doing a good job and who's not doing a good job. So often the one provider would be the best person to ask who would be a better different provider. So let's say, for example, you have a legal provider and you're looking for an accountant, then asking your legal provider which accounting firm they would recommend, that's the best recommendation you'll get, because they would have sent other clients there and they would have had feedback from the other clients. It's also important to, when you are when you're looking at the external suppliers and whether or not they're good before you jump on with them, I give a lot of weight to my gut feeling and intuition. I do give a lot of weight to how it makes me feel when speaking to someone. And I recommend, when you're trying to see what sort of quality of work would be, have some questions ready beforehand. So when you're going in, let's say you're having a chat with someone and let's take Fullstack as an example. You want to know, should we use Fullstack to do our outsourced accounting? Then have some questions ready that are culturally and factually important to you. What matters to you? And also, when you speak to someone, if they teach you at least one thing, that's a big point in it. That's a big gain on their side. In terms of quality, I would definitely recommend looking at historic reports or reviews, and also asking around, or potentially asking for some references. So do they have any other clients that you can have a chat with, and just have a chat with that client to see, is there anything that should throw up a red flag for you?
Yeah. Cool. Thumbs up. All right. So thanks,
Great.
everyone. Hope this webinar has been useful for giving you some pointers on how to structure your finance team. Of course, we're more than happy to help you. We've helped out hundreds of tech companies at various stages of progression, all the way from set up to acquisition. So there's some easy options there to reach out to us. QR code if you're so inclined. Yeah, but we'd love to have a chat. See where we go. Excellent. All right. Thank you, team.
Thanks, everybody.
Take care.